What if 2025 wasn't a failure for Bitcoin in the broader crypto market, but was a setup for something much, much bigger? This year was supposed to be the year. The news was perfect. The institutions showed up. Regulation flipped. Adoption exploded. And yet, prices stalled, liquidity vanished, and crypto felt like the most uncool corner of global markets. In this episode, I sit down with Raoul Pal to break down what actually went wrong, why liquidity, not narratives, controls everything.
Liquidity is 90% of all price action. Everything else is just us talking.
And why 2026 may be the most important year for crypto, markets, and the global economy we've ever seen.
We need to create about $7 or $8 trillion of liquidity in the next 12 months to pay the interest on the debts. 2026 is really important for the Trump administration to try and win. So they will do anything they can.
We talk fiscal dominance, debt rollovers, why the Fed no longer controls the game.
Mirren came out the same day they announced it and said the risk weighting should go to 0. And what he's saying is we want to jam the banks with unlimited amounts of treasury bond issuance. So now we've got a buyer. So they've completely neutered the Fed.
What's really happening behind the scenes in crypto markets and how AI, tokenization, and smart contracts could redefine value itself.
These things cannot exist without each other. They're kind of co-joined at the hip, which is why when you go to Abu Dhabi, Dubai, when you go to the US administration, it's like there basically are two technologies that matter here. It's blockchain and AI.
If you're confused, frustrated, or questioning your conviction, this is the conversation you need to hear.
Let's go.
Everyone's looking for smarter ways to build their Bitcoin stack. Well, here's one most people overlook. You can earn Bitcoin every single time you spend without ever buying it directly. That's where today's video sponsor, Gemini, comes in. The Gemini credit card gives you instant crypto rewards on every purchase, and there's no annual fee. It's a MasterCard World Elite, so you can use it anywhere MasterCard is accepted. Gas, groceries, travel, all of it. Now here's the breakdown. 4% back on gas, rides, and transit, 3% on dining, 2% on groceries, and 1% on everything else. The best part? You're earning Bitcoin or one of 50 plus other cryptocurrencies automatically deposited to your Gemini account. For me, it's been a really effortless way to build exposure to Bitcoin just by spending like normal and doing the things that I do every day. I've literally earned Bitcoin just from filling up my car with gas. And historically, Bitcoin rewards held for 1 year have appreciated 279% on average. You're not just spending, you're building a portfolio. This is the Gemini credit card. Sleek, straightforward, and one of the easiest ways to turn everyday purchases into long-term value. To get started, look at the link in the description and get $200 in Bitcoin when you spend $3,000 in your first 90 days. Click the link in the description to apply and start earning instantly. See rates and fees in the description for more info. So 2025 kind of sucked.
Yeah, it was shit. Every day somebody's slotting the market while, tech stocks go to new highs, everybody else is having a party, and we just feel like the really uncool kids at the party have been watching from the outside while everyone's having a good time.
It's funny, though. I feel like even in other markets, it's been confusing for people. As good as the Mag 7 has performed and as good as that makes markets look, I feel like a lot of people are still finding creative ways to lose money all over the place.
Yeah, it's just been a bit of a weird year. In the end, the S&P and NASDAQ did okay, but didn't do great. But some things did really well. If you had gold and silver this year, you're a god after stinking for, the 2 years prior to that. It's just like, over the long run, we know all of this stuff goes up because of debasement, but the nuances of what market, who'd have thought that the fourth year of a crypto bull market would be negative?
A down year.
Zero people. And then, it's like, it's been just tough for people.
You talk about the debasement trade. We've been screaming about that for as long as we've known each other and long before, but it seems like in the third, fourth quarter of this year, all of a sudden that actually became a mainstream narrative with institutions. JP Morgan talking about the debasement trade. I guess Paul Tudor Jones always has, but Ken Griffin talking about Bitcoin as a hedge against the debasement trade, right? I mean, these are the kind of like cheering for Darth Vader and the Emperor, I guess, when you start talking about JP Morgan and Citadel. But still, it's been a bit surreal that that's become such a narrative.
Yeah, and narratives are sort of allowed or not allowed, driven by whoever whispers them to the media, whoever creates the narratives to go, and it's clearly been everyone's blessing is like you can say that the government is debasing currency. It's like the weirdest thing, because before it's like we can't talk about this kind of things, and now everybody says it. And now people start talking about, they wrap it up in nice terms. It's now called fiscal dominance. And fiscal dominance is we're basically going to debase your currency. Or financial repression is the less nice way of saying it.
Okay, so if the new catchphrase is fiscal dominance, does that mean that the Fed has effectively been neutered, or is it just a narrative?
Oh, no, it's entirely been neutered. So what they did is, it was Steve Mirren was the plant in all of this. Right. Steve Mirren basically said that he was the architect of a lot of the Trump tariffs, but then he went into the Fed and started talking about the ESLR changes. And these three-letter acronyms, we always know mean something, but they pretend they mean nothing. And really what it is the amount of treasuries, the risk weighting of treasuries on a bank's balance sheet. And because of after the financial crisis, they made them quite risky on a balance sheet. So banks didn't have a lot of it. And hedge funds were providing liquidity and others. And they made this little change to say, we're going to reduce risk weighting. It's a tweak. Basically, what it was setting up is for the banks to buy the debt. So they buy more debt, they use it as collateral, they then leverage it out and create loans. And that flows through the whole system. Scott Bessent was saying in a different way, he's like Main Street over Wall Street. So Wall Street, what his definition was quantitative easing was a gift for Wall Street, of course, because assets went up. And it didn't do anything for the economy, really. But when you do it via the banking system, loans go up, and that helps everybody. So loans were tight beforehand, so loans become easier, is the idea. Then they also talked about they wanted the Treasury not to use the balance sheet as the primary mechanism of liquidity. And so they stopped QT, fine. Then they've had to technically add to the balance sheet. But what they're saying is, we don't want the Fed to add the liquidity, because then we're beholden to them for their use of the balance sheet and for interest rates. And those guys are not aligned politically with the fact that we have to pay for all of this debt and issue new debt. So what we're going to do is we're going to change the regulations, neuter those guys, force them into lowering rates, try and get new people into the Fed to keep rates low because we need to roll the debt. That's game number one. Meanwhile, we'll now get the banks to change it. The moment the SLR was kind of rushed through at the end of the year, it comes in January now and is mandated by April 1st. Mirren came out the same day they announced it and said the risk weighting should go to 0. And what he's saying is we want to jam the banks with unlimited amounts of treasury bond issuance. So now we've got a buyer. So they've completely neutered the Fed.
But we did get the announcement that the Fed is going to be buying bonds. And although nobody wants to refer to that as QE, right? Because I guess
because it's technical again. We're too stupid to understand. We call it QE, but the real people who understand just call it a technical whatever. It's like, no, it's all the same thing. You're creating money.
Okay, so at the end of the day, 2025 probably sucked because the anticipated liquidity didn't come in, or didn't come in the ways that we did anticipate. And when it might have, the government shut down.
That's right. I mean, if I go back and, we nailed most of the year, even things like the M2 chart, like a gift. Now, I always said they weren't going to last forever. But everything started breaking apart in July a bit. And July was when the Treasury started rebuilding the general account, but we drained the reverse repo, which was the offset. So we had no real offset to the Treasury building up $700 billion. And so that kind of pulled the rug a bit from crypto because it's furthest out the risk curve. And then the shutdown happened and the next tariff war with China. And before you knew it, everything blew up. And so we've been diverging ever since in crypto because we're the furthest out the risk curve. And so the rest of the year was playing out almost perfectly, and I did not see the shutdown coming.
Yeah, I really think that that's the undiscussed killer of our amazing Q4 that was promised. I guess then the question becomes, what happens when we inevitably shut down again in January because we know that these guys can't get along? I mean, it's coming again.
I mean, the odds are going up again. I don't know. My guess is 2026 is really important for the Trump administration to try and win. Right. So they will do anything they can. So whether they have to somehow paper over the cracks in liquidity if that happens again. We're still caught in a liquidity trap right now because the banks don't have enough liquidity. Year-end funding is a problem. The money markets were breaking. They probably still have to do something with the... I can't believe we've all had to learn about fucking plumbing, but here we are. They're going to have to do something with the standing repo facility to allow the banks to fund themselves into year-end. I mean, what a shit show. And we're still caught in that. And then, I'd love to hear your conspiracy on this, but whatever happened in 10/10, 10th of October, something is bad. And to me, when I look at the everyday selling, in my mind, and I could be wildly wrong, we've all got our wild thesis, is everything broke on Binance. Even the market makers couldn't put in orders because the APIs broke. So my idea is Binance as a market-making organization as well ended up having to be the backstop to all of that, everything that got sold down to nothing. So they end up with this huge book, let's call it $20 billion of liquidated stuff, of which they need to work out of. And $20 billion in shitcoins is a lot of liquidity.
Yeah, especially when there's no buyer anymore for shitcoins. Like, you couldn't have a worse time in the market to have a forced selling of assets that are the most illiquid that they have ever been.
So what's your thesis?
That makes sense. So I have a similar thesis. I guess I just didn't pin it on Binance specifically.
I thought, but because the market makers, Wintermute and all the others where the rumors go, it doesn't seem to be the case. But Binance is big and opaque, and it was their market that broke.
Yeah, I mean, it makes sense because the market makers suffered from automatic deleveraging, so they couldn't make markets at all. Besides the fact that the APIs were off and they literally couldn't get orders in, the exchanges closed their positions. If their positions are closed, they obviously can't be on both sides of the book creating spread.
Who bought the other side of those positions? I mean, so somebody has to, right?
Yeah, I don't even know. The thing is,
because we couldn't get orders in, none of us could. The market makers couldn't. So then it has to be the exchange.
Or some internal market maker or something, but I guess that's
right.
Right. That makes sense. And they can't sit on those positions indefinitely.
No, don't forget, they have a very big shareholder now, which is MGX, which is part of Abu Dhabi's sovereign wealth complex. So, they have accounting and, all of that audits and stuff to do. So my guess is you've got a massive overhang of stuff. You probably bought it cheap. There may not even be a loss on this stuff, but they have to offload it. And so every day they offload, $1 billion a day or $500 million a day, every day for 40 days.
Whether it's Binance or someone else, I can tell you that from my years in markets watching charts, it feels like somebody is just systematically selling everything every day, and that's not a normal behavior. And I don't know who else has that much money. We had the, whale wallets, moving coins, or dormant wallets, I guess, more specifically than whales, and selling, but that feels like it's done. Like, how many guys wanted to buy a yacht and decided that this was the time? I know that there were a lot of them, but they're not selling the exact same amount every single day on the hour, every hour. So I think that you're right. It has to be somebody that blew up and needs liquidity, or somebody that has a whole lot of stuff to sell that they can't hold on to. That's
right. And people say it's nefarious. I probably don't think so.
Right.
I think it's like
if those charts are real, which I don't know, right? Like, was anybody really selling at 95% down? Were they still actually liquidating positions, or is it just kind of chart mechanics? And that was a fraction of a penny by the time it was down there, but they definitely bought a hell of a lot cheaper than prices were trading at the beginning of that day. So if they bought something down 60% to make sure that there was still an order book, and then it bounced, and they're down 40% from that day, you're still wildly in profit.
Yeah, and Binance is a huge, if it's Binance, it makes the most sense that it is, and whether there's a few others that got into the same situation that had to backstop liquidity, these are hugely profitable businesses with enormous cash flows. So this is not a systematic risk. It's just a pain in the ass for the rest of us to have to deal with this liquidity overhang.
Yeah, not nefarious. As you said, like if they did that and have to sell, that they have to sell. It's not, it's, I don't think they're trying to market dump 20 billion in altcoins on a day. So they're doing it slowly. The question is how that sort of bleeds over to the price action we're seeing in Bitcoin as well. But, because Bitcoin,
having seen, like, I used to sit next to the program trading desk at Goldman. So the program trading desk will get a call from like some big asset management firm like Capital International, and they would say, make me a price in this index in $5 billion, $3 billion, $2 billion. And these guys would calculate how long it would take to get out of it, what price to make, all of that stuff. And then what they would do would hedge with a futures contract or the most basic thing. So when you've got a massive risk on and this event has happened, you've had to provide liquidity, you've bought all of this stuff down here, the first thing you do is sell Bitcoin because it's the most liquid market. So you're starting to neutralize your market or macro risks. Then you've got all of the token dispersion risk and all of that stuff. And then you have to figure out that. And it still feels like, I don't know, for some reason, Bitcoin's still being sold. I don't know what quite the mechanics are, but there's something still going on here.
Yeah, there's somebody just selling Bitcoin relentlessly every single day. Maybe that'll change. It has to change eventually, right? Eventually they run out. But this does not feel like there's some major fundamental issue with the market. I mean, Sailor's buying $1 billion a week, half the time, right? And we still see mostly inflows on ETFs. I mean, I think there's generally more buyers in the market writ large than sellers, right? And price.
Well, the other thing when you look at it, what the dichotomy here is, the news has been preposterously good squared, right? We couldn't have had more good news. We've got, and if we take a snapshot of where we are today, because I was in Abu Dhabi and Dubai last couple of weeks, and I spoke to Coinbase, Binance, I spoke to all of the sovereign wealth funds, I spoke to Bitwise, I spoke to, you name them, everybody's like, all we've got is inquiries, all we've got is onboarding, all we've got is financial institutions building on rails. All we've got is stablecoin inquiries. How do we build on stablecoins? All we've got is how do we tokenize our equities? How do we tokenize real world assets? How do we tokenize the bond market? The DTCC, which clears quadrillions, are like, well, how can we use the collateral and put... It's like, okay, we had a good CPI print today. The market just went, nuked again. So it tells you there's an extraneous factor. There's not enough liquidity around, which doesn't help. So crypto gets hit, and then there's this overhang thing.
It's really a head scratcher.
And I just think of it as like, we won't remember this in 6 months' time. No. And I just think that 2026, probabilistically speaking, has to be a good year because of liquidity, fiscal stimulus, and all the other stuff that's coming, regulation changes, and a treasury secretary who really understands about the business cycle and how we need to jam it if you want to win the midterm elections. I mean, it's all there, and they're telling it openly.
Yeah, I just wonder if it's all going to happen in August, 3 months before the election, right? Everybody's $2,000 stimulus checks coming from tariff revenue. They're not doing that now. People have forgotten it by March.
Yeah.
They have to do that. If you're going to buy votes, you need to do it at the election.
Yeah, but things like the no tax on tips is quite a big deal because the US is a big service economy and so many people work off minimum wage plus tips. And if you're not taxing them or massively reducing the amount of tax on people, I mean, that's a big pickup for a lot of average American workers. And my guess is that will happen sooner rather than later so that money can start filtering into the economy.
It makes a lot of sense. And then the other thing that just worries me, I won't say worries because my thesis is the same as yours for 2026, but we had all the catalysts in 2025 and it didn't happen. Not liquidity, but from a news perspective, we got everything we could have wanted and more. And I feel like everybody just takes for granted that we're going to get everything we want and more, which gives it a bit of a priced in vibe as as far as the news and adoption side, not the liquidity side. That's completely different. But how can you get bigger news than JP Morgan accepting Bitcoin and Ethereum as collateral, or the DTCC partners with Canton Network to
Well, the weird thing is we now don't believe we can have nice things.
Yeah, that's right.
That's accepted. It's like, look, we know we're the scum of the earth. We're crypto investors. We're degens. We're now being punished for all of our sins. We get it. So there's no belief. And then if you're an asset allocator, you've not been forced into the market by price rises. You've been forced into upping your gold allocation. You've been forced into tech stocks, and people fought that all the way. They've been underweight the whole way. But as price goes up, they get forced in, which keeps this self-fulfilling kind of reflexive cycle. In crypto, you haven't had to do anything. In fact, they've done really well by not allocating this year. But if that dynamic changes, they all hear what the government's saying. They'll all hear what everybody's saying, and they will have to force themselves in.
All the good news matters when price is going up. It's the bottom line, and it's kind of the same old saying, nothing's better marketing for an asset than higher prices.
Yeah.
And we've seen that for Bitcoin over the years. I guess the concern, though, is that even as we got higher prices in Bitcoin, it never really trickled down into the rest of the market. And a lot of this institutional adoption, actually, if you read between the tea leaves, could be great for the technology and the institutions, but bad for the tokens.
See, I don't believe that. So from the work that we do, every Bitcoin dominance is driven by the business cycle. So if the business cycle is lackluster or early stage, then Bitcoin dominance tends to be higher. When the business cycle picks up, which it has not done because of liquidity and rates and stuff like that, then Bitcoin dominance remains strong. But the moment it changes, then everything starts to outperform. And Scott Bessent is telling you day in, day out, it's going to be a strong economy. And this is why all the forward-looking indicators suggest all of that. So the other thing is to bear in mind, and this only dawned on me the other day. I can't remember if I saw something on Twitter that made me think about it, but anybody who's bought Bitcoin is watching the announcements coming out of Wall Street and the government. And what they haven't figured out is that is all smart contract land. And they're in pristine collateral land. Two different things.
Yeah, totally.
Right, debasement, pristine collateral, the beauty of Bitcoin. We all understand that. But the actual action is about to happen in smart contract land. And people are wildly underweight that. Again, I was around the Middle East. They've all got Bitcoin, bit of it, not enough. They're all trying to figure out how to fit it in their portfolios. It's being top-down driven, like you need to have higher weightings in this stuff. The individual portfolio managers are like, we can't quite fit this in yet. Anyway, so they're getting there. But none of them own smart contracts.
So basically, they're still behind in the minute that the narrative once again catches on and they realize, I need to own Ethereum or Solana or any other layer one.
Exactly. And, and they need a barbell approach to this because this is how the market works. Because if you think about it, the number of use cases for smart contracts vastly exceeds the use case for Bitcoin in TAM.
Not even close. Especially when you have DTCC saying, listen, by the end of 2026, we're going to be tokenizing every asset, and that's every security on the planet. So
if we step back and say, okay, well, why does this affect the underlying token prices? Because these are just slots on the blockchain that are going to be in demand. So every time you tokenize an equity, you're creating block space demand, which drives the value of the token network. So again, people don't really understand this stuff. There's been a lot of shit fighting about how to value networks because we've not seen a use case of this magnitude coming, but it vastly changes everything.
I guess then the next natural question is, at current prices, if we're going to move towards a model where we value utility and actual earnings and metrics, are we wildly overpriced and need a repricing and then see who wins when we're actually giving them proper valuations based on usage and block space?
See, I don't believe that's how you value a network. I believe you use Metcalfe's law, which is basically the number of active users sort of multiplied by the total value transacted on that network. That's how Amazon works, Google works, all of this stuff. It's not how much revenue does Google make is the value of Google. it's really driven by how much actual volume of transactions. If you think about the vast scale of the advertising industry and think of how much it accrues to Google, 60% of every advertising trade goes through them or something. And so they capture pennies of it, but Google has always been priced because of this stuff. And particularly early stage, the market prices in the growth of these applications layers built on top of a network. So I don't think cash flows are relevant at all today. They might be in 15 years' time, but not today. It's like, can this new application create value and grow on top of the network? In which case, you're going to price this stuff at vast multiples. Remember, Amazon traded at a P of 800 for 8 years.
Yeah, valuations can be exceptionally out of whack for a very, very long
Yeah,
time.
Tesla, because nobody believed it was a network company. And sooner or later, everyone's realizing that this is networked AI across networked cars with networked robots, networked logistic chains, and everyone's going to go, oh, shit.
Yeah, I'm trying to play devil's advocate, even though it's very hard because I agree with everything you're saying. What about the push and pull between private and public blockchains? So, that a BlackRock or a DTCC, we have seen them largely make announcements with existing public chains that we can invest in the token. So it's sort of theoretical. But if they go the private route and they just basically, circumvent all of the decentralized chains that we love and those tokens are never used and they do it themselves. Co-op our systems, good for the technology.
I guess they will try it, but they'll realize decentralization is where the security of the chain lies. And if the information they're transacting on that network is valuable, they need to have a decentralized chain. So my guess is they'll come round to it. But yes, there will be some private chains, much like there's still private intranets. But it's a player versus everything world. You and I have talked about this endlessly. People think of it as a PVP. The more use of blockchain, the more valuable all of our tokens become, because the more use of blockchain. And the more people move around, the more applications get built. Because after the financial system, we haven't even got to tokenizing the internet. We got all the, the dreams of Web3. We only started that game. We're getting excited about the financial markets. The other side is addressable TAMs of 8 billion people.
I was just going to ask you about that. It's funny because every single conversation I have now, so I'm sure it's the same for you, and maybe it's self-fulfilling. We're all a bunch of macroeconomists now. Nobody's talking about in-game assets and the metaverse. What happened? Where are my NFTs, man?
Yeah, and all of that will come. Will definitely come. It's like, every ticket, every contract ends up being an NFT. People don't realize the scale of this technology, but we don't have enough capital and we don't have enough attention to do it all in one go. And we didn't have the right regulation. So the regulatory green light goes to the people with the most instant capital, which is the financial system, because they capture the economic efficiencies of using blockchains super fast. So it makes sense to me. Eventually, the Web 2, the existing internet, will move to these rails. And so if you think about it in terms of time horizon, I keep saying you just extrapolate out the log trend of the market cap of crypto. We're at 3 trillion today. If you extrapolate it out into this nice little log regression like we all do on the Bitcoin chart, you get to about 100 trillion in 10 years' time or less by 2032, 2034. So if we're $100 trillion, we've got 97 trillion of wealth to create. That ain't just coming from the banking system. It's not big enough. It'll come from the wholesale adoption of everything using blockchain rails, digital ID, everything.
So looking forward to 2026. You gave an incredible presentation at Solana Breakpoint that's kind of broken the internet. I see your face every 5 seconds. I love you.
Sorry.
That's annoying. I'm just kidding. But obviously, liquidity is going to drive things largely. Maybe you can just, I guess, give us the picture of what you're expecting in 2026, but then we can get into the more exciting conversation of once that happens and we stop having to talk about macro every second, what are you excited about in Web3 and crypto specifically?
Yeah. So we have, when I look at the chart of interest payments, and look at total liquidity, interest payments lead, and then we have to have liquidity to essentially pay for the interest payments. And that tells us we need to create about $7 or $8 trillion of liquidity in the next 12 months to pay the interest on the debts.
It's just a crazy number. I'm old enough to remember when $1 trillion was a lot of money.
Yeah, that's right. And so okay. So that means we've got all this to go. So how does that come? Well, if we look at the changes to the SLR, this little innocuous 3-letter acronym, that probably brings 3, 4 to 5 trillion of liquidity that's driven through the banking system. Call it 3 trillion, call it 3 trillion for easy math. Then we've got the fiscal stimulus. Well, the fiscal stimulus probably adds $1.5 trillion into the banking system. So we're at 4.5 trillion. And we barely started looking at what other levers that they can use. We've got the balance sheet rebuilding. They've got the drawdown of the TGA. Well, let's chuck in another trillion there. We're going to have 5.5 trillion. Okay, we're getting very close to the numbers. Now imagine if they then change the SLR fully and get rid of all the risk weighting. We're now immediately at 8 trillion. So without having to do any complicated maths, it's like
lowering rates.
Yeah, without even talking about rates. So the liquidity coming is big. Will it come exactly as I say? No. Will it all be smooth? For sure not. But generally speaking, that's the game we have to play. So that's what I look forward to in 2026 is like, if 90% of Bitcoin's price action is explained by global liquidity, then that's the most dominant macro factor of all time because it's 97.5% for the NASDAQ and, equivalent amongst all the asset classes. So therefore, we just need to worry about this one factor because everything else is noise. And this one factor says you need to print money.
They're going to print so much money.
And that's the whole thesis behind the everything code. It's quite simple, really.
So they're going to, let's assume that that's the correct thesis for 2026. Bitcoin obviously would rise. What do you think happens to the altcoin market? Does it look like the alt seasons of the past? Do we get it in sort of bubbling narratives, metaverse summer and DeFi fall, or, RWA spring? Do you think that it's going to be more selective or that it's going to be across the entire market? Also, at what Bitcoin price or signal do we actually see it flow down? Because we made it all the way to 126. It never did still, right?
Remember, it's driven by the ISM.
Yeah, and the business cycle. And by the way,
in which case, wherever
about that, and I was like, I've heard this somewhere before.
So when the business cycle crosses positive, wherever Bitcoin is, that's where it starts.
Okay, that makes sense.
It's really simple.
So the premise there then is that the previous cycle of Bitcoin to altcoins and all of those things wasn't exactly internal to the crypto market. It was actually based on this exogenous factor, and people just
which is the same that drives small caps. It's the same that drives credit markets. It's all the same thing. It's the risk curve. So let's talk about the performance. So right now, I've always said, expect a 35% pullback in Bitcoin twice a year in a bull market. We've had 2 of those.
Yeah.
And then what happens is there's a risk curve. So ETH falls 40%, 45%. Solana falls 60%. Sui falls 74%.
And memes go down 99.9999999.
Correct, right? So there's your risk curve. On the way up, the opposite plays out. Now, it doesn't mean memes will go up, but generally, if you're in the right part of that risk curve without being too risky, you should get decent pickup from things that are less liquid and smaller, earlier phase, stuff like that. So that's generally how it plays out. And it usually happens quite fast, as we know. Now, we only have 12 months, and maybe they're not going to win the midterms, and we start figuring it out via prediction markets by September, and it's all like, oh, fuck. It's all over. So I don't know how long this thing lasts, but let's assume it's at least 9 months. So then, do we get the rolling narrative cycle? Generally, that's how it's worked, because when you're further out the risk curve, it's just degens who are buying it. and we're always looking for the next tail chase. Where can we make the next money? Because it's not Wall Street coming to buy our gaming tokens or our memes. It's us lot fucking around with our capital because we're feeling like we've made some money. So we have to understand how our psychology. So I think we will have that rolling thing. But, generally speaking, the layer ones are so easy if they're higher quality, layer ones that have proven adoption. It's like that's a much easier bet. Whether your DeFi protocol or your gaming one or whatever will get adoption, we don't know. I mean, there's an interesting one, the thesis on Zcash that's playing out. Okay, it was an internal rotation.
What you think of that? Yeah, I would love to hear you.
There was an internal rotation because the market was going down, it went up. Okay, fine. We've seen that 100 times before. Everyone gets trapped in the top. The market stabilizes and it plunges again. I think there's a decent chance that becomes a real narrative. And people, when the market goes up, it fully goes up again. But I don't know, because most of us who've been in crypto for a long time are tired of fighting the government. And I just don't know if I want to do that all over again.
Yeah, and we're jaded by the cyclical narrative I talked about, right? So like it would take a hell of a move to let it have a second bump if something else could capture that liquidity, right? So we got our privacy season, right? So what season comes next? Is it privacy season part 2? It could be. But Zcash to me felt kind of out of nowhere and a bit coordinated. I have no conspiracy
Well, I think it actually
it.
came from Naval Ravikant, who was like, and because Naval is the voice of God on Twitter,
he is.
that everyone listens to him, and people had obviously had dinner with him, and he's been talking about it. So all at once, everybody who's friends of Naval, from Tim Ferriss through to Balaji, starts talking about Zcash, and then it spreads out to the Zcash OG holders like Barry Silbert and Chris Berniski and all those guys, all high quality guys. And I think the thesis is right, and it probably has a very important role in the future. But fuck me, it's going to be a hard asset to own when every bank wants to shut it down and every government wants to shut it down.
We did this with Monero. Like I would think Monero would actually catch the privacy, bubble, but Monero's already been delisted in so many places that I guess it can't.
Yeah.
But is Zcash for some reason, maybe I'm ignorant, but really, because I haven't done the work, but is Zcash really like the gold standard in privacy tokens?
Apparently so. I mean, this guy was around from Satoshi days, super well regarded. The technology stack's been proven over time. The people that we respect to actually do the homework, stuff like Mert, who's on X every day, says it's the real deal. Barry Silbert, people who are that good quality people say this, and so fine. I'm just like, do I really want to go through that battle again? Because that's a hard battle. But that's why, maybe they're right. Maybe it goes to 50,000 in 15 years' time, or like Bitcoin does, and it's now trading at a few $100. That's a great opportunity. But having held Bitcoin on and off since 2013 and gone through multiple down 85%, all of the stuff, it's pretty hard.
Do you still think Bitcoin has the down 85% in it?
No.
Me either.
I don't. Down 50, probably. Don't forget,
dude, tech stocks can go down 50 in a few months. Now, once we're at down 50, we're in the world of normal, in my opinion.
Yeah, that's right. We're in the the world of riskier
like
tech stocks.
In 10 minutes overnight a couple of years ago, right? I mean, there's nothing crazy there.
No. So I think it's that, maybe 60%. Last time was what, 65 or something?
I think
it was less.
Like 74 actually.
74.
Last time 60, we went 69K. I mean, it depends on what exchange, but in the plus 70 plus, I think it was 70. The year one before was 85.
So what is it this time? 55, 58, whatever. Because each time the magnitude of the sell-off is less because the adoption of the assets is
less. Yeah, it plays both sides. That's what, so even if you're like a super 4-year cycle believer and we topped on exactly the right day and it's all over, I don't understand believing that there's going to be another 75 or 85% drawdown if we got disproportionately low upside. Why would we get the same horrid downside without the upside in the cycle? So even if you believe we're going down for 3 years, why would you believe we're going down more than that 50?
Again, because everybody will misconstrue this. That doesn't mean that your insert bags token will not go down a shit ton more than Bitcoin. Bitcoin is the benchmark asset. Everything else is further out the risk curve, so everything will fall. And your crappy, I got my idea from my mate last night who said this is the next great thing in AI tokens, will go down 99.9%.
The business cycle has been bottomed out for years, right? I mean,
Yeah.
the ISM. So there's sort of an expectation that it has to rise in 2026. It's been just beaten down. What if it just stays flat and low again? I mean, what are the factors that convince you that it's we're going to see that move? And listen, it's not tied to a date. Like if it's June or if it's November.
No, so all of the forward-looking indicators that we use, and I've been doing business cycle analysis for 35 years, and really for 25 years as the main source of what I do. Everything we look at says it's going to be strong, whether that's financial conditions, whether it's the number of central banks around the world cutting rates, whether it's just a whole raft of stuff that we look at. So probabilistically speaking, yes. Ignore all of that. Donald Trump and Scott Bessent are telling you we're going to have a super strong economy and we're going to give you a fiscal stimulus. Oh, we might even invade Venezuela to get the oil price lower. And we're going to goose the banking system. Then what they're telling you, and we want Main Street to win. What they're telling you is they want the ISM higher. And this government of all governments understands how to do that.
I am eternally blown away by the buttons they can push and the levers they can pull. Just when I think there's no more way they can prop up markets or pull something off, there's always another one, and it's unbelievable. So to me, it feels like they're just endless. Like recessions are illegal.
Well, don't forget, Scott, they got in a large part because of two key donors groups, the technologists and the crypto people. If they want to fight the midterms and win, they're going to need that money. And the crypto people are going to be, where the fuck is our bull market? The technologists are getting everything right now. They're getting the AI regulations, hey, we're going to use all of the internal data of the entire US government, create super AI. We're going to democratize space. We're going to do everything they're going to get. And Brian Armstrong and everybody else is going to say, we need A, to get that Clarity Act through. B, kick Wall Street into action, get them start to actually do stuff. And C, we need the liquidity to get this market going because you're doing something wrong. And so it feels that the incentives are aligned for everybody to do this.
Yeah, we spoke at the end of last year. Maybe it was the beginning of this year, but we talked about the election. And you were the first one that made it just how clear to me it was the technologists that swung the election, and specifically the crypto industry. And
Elon Musk single-handedly.
Yeah.
Elon single-handedly went to exactly the Occam's razor, the single most important leverage point in the entire election, and campaigned himself to win it. I mean, holy fuck. And it was obvious then what was going on.
And he's going to be worth over $1 trillion when SpaceX.
Yeah, and because it wasn't even so much, I don't think he even cares about wealth. He made it very clear at the time, is there is a fork in the road of the potential futures of the divergent paths. And if we go one fork, we're likely to be following Europe. If we go the other fork, we're going to accelerate and change all of the structural problems we have. It's not going to be an easy one, but also China's going to do it whether we do it or not. And that fork was the right split, I think, for the American economy. Whether the Europeans care or they just want a museum for old people, that's up to them. But right, if you want to be a global superpower, you have no choice. It's what other people don't understand is AI and the rise to AGI and then ASI is the single most important race of technology in all of human history. It's the most important technology humans will ever invent. It'll be the last great technology we'll ever invent because AI will invent everything post it. So this is the big one. this is the most powerful thing ever, because what we've just created, people just don't get it yet, is we've just created a new, more intelligent species than humans. We've created our own replacements. Not they're going to kill all the humans, but at the apex of knowledge and intelligence. This is it. And there is no way the Americans can lose this game, because then there's only one nation who can take it all. And one nation with this power, okay, that's a very complicated world.
Where does crypto benefit from AI? We've had endless narratives over the last year or two about the marriage between the two, but I think we all agree that AI is going nowhere, and that those stocks and companies are going to be the biggest in the world as they continue to win that race. Is there actually a role? We've seen with the miners, right, who can switch their data centers over and they can be AI data centers rather than miners. But is there a natural place where we actually see crypto and AI?
There's at two levels. One is pressing current urgent need, and the other is where the world is going. Pressing urgent current need is, in a world of AI, we need authentication of humanhood. Right? So tokens and zero knowledge proofs is a great way of authenticating that Scott is Scott, Raoul is Raoul, because soon there's a million videos of you and some of them aren't the real one, some are the real one. Yeah, how do we do all of that shit? That's urgent. You saw Kathy Woods congratulating some couple online. It was bloody AI. And it was like, okay, it's so close to creating a big election problem. I mean, by the actual general election, better fucking have sorted this shit out, because any state actor, any bad actor can spam the internet with everything and nothing is real.
Yeah.
And that's the collapse of society, when there is no source of truth whatsoever. So that's a pretty big use case for this stuff. And then we're saying, okay, there's a bunch of people who are saying, well, we can make bots from AI trading stuff. Okay, fine. I mean, hedge funds have been doing that kind of stuff forever, blah, blah, blah. It'll get better and better. Fine. Then there's the other world, the world that Ribbit Capital have talked about and I've written about, is, and it's an expression I've used with you in the past as well, is like, tomorrow will be more digital than today. All information is now being tokenized. Tokenized, we have tokens that feed AI. That's how AI trains itself. It's on tokens. They're data tokens. The token is a packet of information that is machine readable. So if you would tokenize a physical book or a physical photograph, you have to make it machine readable, various formats. That process to make it readable by the AI is creating tokens. When we're moving to these super squid that suck everything, which is all the AI, all knowledge, you're going to have to tokenize extraordinary amounts of data, right? All of the data. If you want to get to ASI, the race is how much can you suck out of all this knowledge? Most of this data is private, or others are difficult to get at. Or it's held within scientists, universities, governments, and all of this stuff. So once you tokenize it in the packets of information, you can then trade it via tokens, i.e. on a blockchain. What does that all mean? What is Raoul talking about? I'm talking about gigantic global instantaneous marketplaces for data that trade 24/7. We won't be the participants, it'll be agents pulling data, trading data, collecting data, looking for patterns in data, and building the AI itself, the AI beasts themselves. That becomes, everything becomes a marketplace, all information, everything. And why? Because it is the only way to incentivize everybody and everything to share their data. Every marine biologist will take every single reading they've ever had, everything about the reefs, every single bit of information, and sell it via tokenization. You'll have every university, all of us as people might want to feed the AI our photographs. You know, we've all got hundreds of thousands of bloody photos from our phones. Can we get paid for all of that? Okay, that's interesting. Can everybody get paid for stuff as the AI agents come? So now you've got AI agents, which we know have to use other AI agents to do things. they need to pay for compute and electricity. And the only efficient way of doing this is tokens. And people say, yeah, but what about stablecoins? They'll use stablecoins. Here's the really lovely one. You cannot, the dollar does not break down beyond 0.1 cent. Cent is the lowest denominator. So it didn't work. Dollar's not fractionalizable enough for these. Once you see it that way, you're like, oh, that's fucking obvious. So what you have to do is they'll use whatever structure they want. Can be any currency because they're agents. They'll just transact. So the agents are paying agents in micropayments all the time, instantaneously streaming money to each other all over blockchain rails. You then create vast marketplaces of information, of which the agents need to pay for, or the AI companies overall need to pay for. And then you've got agents on top trading these markets, which are on top of blockchain rails. So there's your answer. It's like, these things cannot exist without each other. They're kind of co-joined at the hip, which is why when you go to Abu Dhabi, Dubai, when you go to the US administration, it's like there basically are two technologies that matter here. It's blockchain and AI.
We're going to have so much time to talk and do podcasts when our agents are out there doing everything else for us.
Our agents will be doing the podcast. We'll be drinking at Tilly's and having a good lunch.
We're watching the agents to do a great podcast. Maybe our other agent's going to watch for us and give us a summary.
Yeah.
Okay, so I know we're coming to the end of time. Best case scenario, then we get a massive bull market. How high are these things going?
I'm not going to do that game because
I don't mean. I don't.
You know what I mean? You know what I mean? It's just so tiring. Look, significantly higher. Multiples of here. So, I'm not talking about a doubling. I'm talking about tripling, quadrupling, whatever it is, right? Of Bitcoin.
I'm not trying to get you to say $15 million Bitcoin by 2030. I just, I guess I'm trying to get the idea of like, if we just didn't even pull a 2x from the last all-time high, are we now in massive dampened volatility?
It should be a classic, what we would think of as the 4-year cycle, which is the debt refi year.
Just spread. Yeah.
Yeah. The debt refi year is this year. We know there's a lot coming, so probably a lot will be the answer.
I like
and so we don't believe we can have nice things, and then we'll be given nice things again, and we'll all come back and go, yeah, I get it now. I forgot all about that misery of 2025.
It's going to be a non-event. I'm pretty convinced. It's so hard not to be focused on what's happening in the day, the week, the month, but none of it matters.
Exactly, because liquidity is 90% of all price action, which is boring. It's weird, but everything else is just us talking, when really it's all done by that.
I love catching up with you, though. Next time we'll do it at Tilly's while our agents do this conversation, as you said.
Exactly. But that's the one question for everybody to think about is, okay, if liquidity explains 90%, where can that thesis go wrong? As you said, could another government shutdown? Yeah. Is it going to last long? No, but it will make us feel painful again. Does something else change that dynamic? And if it happens, it will blow up the bond market. So I don't see how. I keep coming to I don't see how. As Lim would say, nothing stops this train.
Yeah, in my mind, it's just when in 2026. And I am heavily weighting the back half of the year because of the election and not so expectant that we're going to see anything explosive in the first half. I hope I'm wrong, but it could be very boring and sideways, and we could lose a lot of good soldiers in the time-based capitulation.
What we've also learned is it is almost impossible to predict in advance the wiggles. But generally speaking, the direction is relatively simple, except for this year, which has been pretty shit. But I don't really look at year to year. I look at cycle to cycle. It's like we invest for the cycle, and the cycle hasn't finished yet.
Yeah, I think you could also make an argument that going back to January 1st or this time last year is nonsense. Everything kind of repriced after the election when we realized that we were just in a different market, a different situation after Trump won. So if we benchmark back to, the 70,000s or wherever we were when that happened, it's still not as bad as it looks. Optimistic view.
Exactly.
All right, buddy. Well, I'm going to let you go. I hope you feel a lot better. Thank you so much for having the conversation. I hope we can do it again soon in person.
Absolutely, my friend. Looking forward to it. Take care and have a great holiday and New Year.